Good to see you, Rishi, in the middle of FII. There's a frenzy out there. There's a frenzy in markets. Do you share the exuberance?
I enjoy the exuberance insofar as it helps provide a bit of a rising tide for our existing portfolio of assets. But, look, we are a little schizophrenic as private equity and private markets focused investors. When public markets get a little over exuberant, it creates a better environment for us to exit our existing assets, but at the same time, it makes it much harder to acquire new assets because you have to exercise some degree of valuation discipline. So I think the narrative has shifted for us from a beta-focused play on certain sectors and industries in the market to an alpha-focused play. Select the company, select the team, select the sector, and then lean in behind it.
You're all over the GCC and the United States of America. You are a global player. But in the GCC in Saudi, how much of your assets under management are deployed here, and how much more do you want to do here, specifically in which industries?
So the current percentage of the 60-odd billion that we manage today that is deployed in the GCC is relatively modest still, right? But it is one of the fastest growing. Right. And I think so the stock is low, understandably, because we've been investing in the US and in Europe for 40 plus years. Yeah. We started in the GCC more recently. But, the pace of opening up and reach out for private sector capital participation alongside, the governments over here is so attractive in terms of the opportunity set as well as what the governments are doing to attract that we see that growing. Now, in terms of sectors that you asked about, where do we see the opportunity? I think I'd bifurcate it in two categories. From a PE perspective, we like the whole business services area a lot. We like healthcare a lot. We like transportation and logistics a lot. That in turn is very correlated with how we see the infrastructure investment opportunity in the region, where in addition to digital infrastructure, which we are all talking about every day nowadays, it's the transportation and logistics, it's social infrastructure, and it's the energy infrastructure. And we see those as secular long-term plays.
Just before we move off the region, how much Chinese money have you brought in here? How much FDI have you facilitated into Saudi Arabia, let's say, from China? Because that's an important corridor here, isn't it?
Yeah, absolutely. And one of the things that has really changed in terms of narrative, and I've been coming to FII since when we started 9 years ago. So, the big shift is really how the rest of the world sees the region. The rest of the world used to approach the region for capital. Now the rest of the world still approaches the region as a source of capital, but is increasingly seeing it as a destination for deployment of capital. In particular, markets in Asia, in particular China. So China is actually, CIC has anchored our Golden Horizon Fund, which we closed about 3-4 months ago. And they, alongside CIC, we have other Chinese institutions that have backed the Golden Horizon Fund. The primary purpose of that fund is investing into companies in Saudi Arabia. We already have 3 stellar companies in our portfolio, Trucker, Salah, and Noornet, and we expect to do 7-8 more deals in that space.
Let's shift gears a little bit, because we've got a Federal Reserve meeting over the next 24 hours, and they're flying, I would say, a little bit blind. We're in a new cutting cycle. Should they be cutting when they're flying blind on data in the second longest shutdown in history?
So, look, they are flying blind because they don't have access to most recent data as a consequence of the shutdown. But I think in these instances, in the absence of perfect information, you have to lean in on judgment. And I suspect the judgment that the Fed will exercise is to err on the side of protecting employment rather than protecting against inflation, because the inflation print came in marginally lower, right? So it's more than likely that we see another cut tomorrow. But hey, listen, I've been wrong before.
If a cycle of cuts comes, what does it mean for risk? I mean, we're penciled in 100 basis points in the next year.
So I think the key over here is not just the degree of interest rate cuts that we can expect over the next 12 to 15 months, let's say by the end of 2026. The more important consideration, at least for private market investors like us, is the ending neutral level of interest rate and the stability around that end game, right? Because that's what we like to be able to underwrite with some degree of acceptable uncertainty around, as opposed to, big swings between 3% and 5%. That's hard to underwrite, right?
Cast into 2026, I have one question. Do you think the bigger risk is of a US sovereign debt crisis or a systemic credit blow up?
Neither. I think neither. I think the risk here is, so I don't believe in the systemic credit.
You're not buying either of those trades?
No. And I don't believe in the US sovereign debt crisis either. I think what is potentially a risk is a widening of the spreads, the risk premium, right? And we've seen a little bit of that. We've seen it come through and manifest itself, for example, on the margin in the massive rally we've seen in gold prices, for example, right? So are investors sitting back and saying the presumed risk premium attached to sovereign credit or the presumed risk premium attached to private credit that was X in the past should be X plus 25 basis points? Maybe, right? But that's okay. That's what we do for a living. That's what we do for our daily jobs. So and I think that's fine. We can handle that, and that continues to be something that we want to monitor very closely.
So you'd wrap your arms a little bit around if the spreads widen out. You say that's healthy.
It's healthy because it creates a rational base to invest behind, particularly when you are an equity investor, right? But also it is healthy because it separates what might appear to be, well-performing managers benefiting from a rising tide from those that continue to stay disciplined and focused on true alpha.